Good morning, traders, and welcome to this Orbex Market Insights update for the equity indices on Monday, August the 12th, where we will be focusing on the SPX500 and the UK 100. So, it was a very volatile week for equities markets last week. Earlier in the week, we saw heavy losses across the board as the market responded to news of a fresh set of US trade tariffs on China. Following the announcement then, China responded by sharply devaluing the yuan, leading to the US labeling China a currency manipulator for the first time since 1994. The market is now fearful that the next round of trade talks due to take place in September will be abandoned, leading to further volatility. However, equities were able to recover strongly from initial lows last week as a wave of central bank easing headlined by a larger than expected 0.5% rate cut by the RBNZ helped ease investor sentiment. Indeed, the market is now widely expecting the Fed to have to ease further this year, despite the central bank downplaying the likelihood of further easing as it cut rates last month. Looking ahead this week then, the key focus is on US and UK CPI, and surprise weakness in these readings will likely further support equities by boosting easing expectations once again, while any upside surprises could see equities coming off a bit. The Bank of England continues to highlight the risk of a no-deal Brexit, which could force the bank to cut rates in order to protect against recession. Okay, so let's take a look at some technical levels then, and please remember that opinions shared here do not constitute investment advice, and when trading, losses can exceed profits. So starting with the SPX 500 then on the daily, and you can see clearly here the extent of both the initial sell-off last week and the subsequent recovery. So price broke down below the rising trend line from 2018 lows. We broke down below that 2908.55 level, traded down, even piercing below the 2798.34 level before reversing sharply to trade back above that broken trend line where price is currently holding. So for now, while price holds back above that broken trend line and the 2908.55 level, focuses on a further break higher. However, bulls will need to see price very quickly back above the 2952.11 level. If we drop down onto the H4 charts then, you can see the extent of the recovery so far. So we had that very strong impulsive move to the downside last week, and we've had quite a laboured recovery so far with momentum currently stalling. So again, while we remain above the 2908.55 level, focus is on a further run to the upside, with bulls looking to quickly get back above the 2952.11 level to trade back up to retest all-time highs around 3027.65. However, if we do break back below that 2908.55 level, then there is the risk of a further downside test of the 2798.34 level, which was tested last week. Okay, so these are the levels I'm looking at on the SPX 500 then. Let's move across to the UK 100. Okay, and you can see here that it's pretty much the same story as we've seen in US equities. So we've seen this heavy decline and then a subsequent recovery. However, you will note that the decline has been far more severe and the recovery far more shallow than we've seen in the US equities market. So again, price broke down below the rising trend line from 2018 lows last week. We broke down below that 7262.5 support, tested the big support at 7091.8, which was the May low and February lows, and you can see that that price has held for now, and price has subsequently reversed back above 7252.5. So while we're holding here, the next major test for bulls is going to be this 7345.3 structural level, where we also have the retest of that broken bullish trend line. So if price can get back above that level and hold, then this should pave the way for continued upside in the UK 100. However, what we could see materialize is some rejection around this level and then a rollover, which would once again put focus on a run down to that 7091.8 level. If we drop down onto the H4 charts then, you can see how shallow the recovery has been so far. So you can see the severity of that decline last week. We had a long consecutive run of bearish candles, and then the current recovery has been very shallow indeed and very choppy and laboured, suggesting that momentum remains skewed to the downside for now. So again, as I say, focus will be on a test of this 73.45.3 level and the broken bullish trend line. If we fail there, then once again, we need to be looking at a test of this 70.91.8 level in the near term. Okay, so these are the levels I'm looking at then in the SPX500 and the UK 100. Please stay tuned into the blog this week where we will keep you updated each day with all of the important trading developments as they happen. Thanks a lot for joining me today. Good luck with your trading. Bye.